Welcome to Quick Invest Brief. You think investing is a game of skill, of picking the right stocks at the right time. You're wrong. Investing is a psychological game, and the most dangerous opponent you will ever face isn't a volatile market. It's your own brain. Every day, your mind is a battlefield of emotions that can sabotage your financial goals. Today, we're going to break down the emotional biases that cost investors a fortune and give you a simple system to beat them. This isn't about tips or tricks. This is about understanding how your mind works so you can unlock a new superpower in the market. From the moment you log into your brokerage account, your brain is actively working against you. The emotional pitfalls are everywhere. There's panic selling, where you watch your portfolio drop 10, 20, even 30%, and your gut instinct screams to sell everything before it gets worse. This is pure fear, and it forces you to lock in your losses at the worst possible time. Then there's FOMO, or the fear of missing out, where you see a trending stock on the news and you jump in at its peak just because everyone else is talking about it, only to watch it plummet right after you buy. And there's anchoring bias, where you get fixated on the price you originally paid for a stock, making you unable to sell it even when all the data says it's a bad investment. These biases are not a sign of weakness. They're hardwired into our psychology. They are the instincts that helped our ancestors survive, but they are a recipe for financial disaster in the modern world of investing. If relying on your emotions is a losing strategy, what's the solution? The answer is to build a system that takes emotion out of the equation. Your system should be automated, disciplined, and unemotional. The first step is to create a set-it-and-forget-it plan. Instead of trying to time the market, set up a plan to invest a fixed amount of money at a regular interval, every paycheck or every month. This is called dollar-cost averaging. It's a simple but powerful strategy that forces you to buy more shares when prices are low and fewer when they're high. Over time, this averages out your cost and consistently outperforms those who try to time the market based on gut feelings. The second step is the 2-minute check-in. For many, the biggest source of emotional stress is checking their portfolio every day. Resist this urge. Your financial system should only require a check-in once a quarter, or even once a year to rebalance. This simple habit keeps you from making impulsive decisions and protects you from the emotional roller coaster of daily market noise. Finally, the emergency fund rule. One of the main reasons people panic sell is a fear of a sudden financial emergency. Your system should include a robust emergency fund with 3 to 6 months of living expenses in a separate, easily accessible savings account. This fund acts as a safety net, so when life happens, you're never forced to sell your investments at a loss. By building an unemotional system, you gain the ultimate superpower in the world of investing: patience. The vast majority of investors are emotional. They panic, they chase trends, and they lose money. By simply being patient and sticking to your plan, you give yourself a massive advantage. You transform from a reactive, impulsive trader into a disciplined, long-term investor. You stop fighting your own brain and start letting the power of time and compounding do the work for you. You realize that the best investors aren't the ones who know the most. They're the ones who do the least. The most important action you can take is to build a plan and stick to it, letting your automated system do the hard work while you focus on living your life. If you found this insight helpful, hit that like button, and make sure you're subscribed to Quick Invest Brief for more powerful insights, briefly told.